All right. Hello, everyone. I'm Lisa Twilley. I'm the director of MCE Women's Business Center here in Salisbury. Just to give you a little information about Maryland Capital Enterprises and what we do, we assist entrepreneurs that are getting started in business or if they're already in business and trying to expand with our business consulting, marketing consulting, training workshops such as this. And we also do micro and small business loans. We also have a variety of classes coming up, so I will be sure to put our website in the chat, my contact information in the chat, and also just to let you know, we cover the entire Eastern Shore of Maryland, Baltimore City, Baltimore County, and Anne Arundel County. So if you need any of our services, please reach out, and I'll be monitoring the chat, Lindsay. But today we have Lindsay Peel with us. She is the owner of Kingdom Vision Consulting, and I'm going to let her go ahead and get started.
Awesome.
Thank you for being here.
Thank you so much, Lisa. Thank you so much, Donna, for always trusting me and for bringing me back to speak to your amazing audience. I am super excited for today's presentation. I have some good stuff for you all. I am going to minimize these screens. Give me 1 second. Let me hide that. And can you all see my screen? Perfect.
Yes.
Awesome. So who is Lindsay? I am a second generation entrepreneur. My father's a plumber. My mom has been running the business for 20 years. I always like to pay homage to them because had it not been for them creating our family business, I would not be here. My parents had me after the age of 40 and started their business after the age of 45. So I'm here to tell you that it is possible. Success in entrepreneurship is absolutely possible. I am a Howard University alum. I graduated originally with a Bachelor of Arts in Broadcast Journalism, and I bumped into finance when I started as a part-time teller at Wells Fargo at the time back in Washington, D.C. I spent a number of years in the banking industry. My career really took off after I graduated. I stayed with the company because I loved it so much. I loved really teaching financial literacy. I was able to merge my passion with public speaking, but also being able to combine my experience in financial education and providing that financial literacy. I am also a radio personality. I just started my new radio show called The Real Deal, where we provide resources, empathy, accountability, and literacy to improve the overall wealth journey for the entrepreneur. I am an all-around community engagement specialist. I work with a number of organizations, specifically in marginalized communities, targeting home ownership as well as entrepreneurship. I serve as the vice president of the Greater Baltimore Black Chamber of Commerce. I serve as the vice chair as O'Hare Development Partners CDC, where we are currently building a park in the middle of a neighborhood that our for-profit company is rehabbing in East Baltimore. So my hands are in a number of things, real estate, entrepreneurship, and finance related. So I am super, super, super excited to be here and share some great information with you all. Kingdom Vision Consulting, we are specifically a financial services firm that specializes in CEO financial planning. And what that encompasses is personal and small business financial planning. Most of the time as entrepreneurs, you will typically find financial firms that will either help you with your personal finances or they will help you with your business finances. But we offer a very specific approach that's very unique for the entrepreneurship community to focus on both. While you and your business should definitely operate financially as two different entities, they're almost like married entities where everything that they do kind of impacts each other in some way or form. So it's very, very, very important that not only are you focusing on growing your business and taking care of your business finances, but it is extremely important that simultaneously you are still taking care of your personal finances. Most entrepreneurs forget themselves when they start their businesses because you're so focused on how do I take care of my employees next week? How do I pay my lease next month, right? But it is important, it is mandatory that you focus on both entities at the same time so that one, you can ultimately be able to plan to retire. If you don't take care of your personal finances as an entrepreneur, you will not welcome retirement nicely, right? We will have to go back to work, or we will find that the money that we saved just wasn't enough. I mean, considering inflation now, right? We have seen prices increase in every industry, in every capacity over the last 2 years that we've been in a global pandemic. The reality is that it's only going to get worse, especially once things kind of go back to normal, in which they probably won't, but we have to prepare for that. It's even more important for us to prepare for that as entrepreneurs, okay? Today's objectives, we're going to talk about you, your personal finances, and your business, and how you as that entrepreneur contribute to your business. We're going to discuss the elements of class, which is the 5 ways that our firm specifically helps entrepreneurs: credit worthiness, long-term wealth, asset protection, strategic banking relationships, and strategic asset accumulation, and their impact on your business. We're going to talk a little bit about sources of capital, and then I'm going to give you guys an opportunity to ask me some questions, right? I enjoy being in the hot seat. I know after this presentations, I know you're going to have a lot of questions, and I want to make sure that you have an opportunity to do so. If you do have questions throughout the presentation, please feel free to drop them in the chat so that the team can make sure that we get those answered towards the end as well. So as an entrepreneur, listen, it is so important for you to understand yourself. Who are you leading this business, right? And I like to even step away from the term entrepreneur or business owner. You are CEOs, okay? I know that most of the time that means for us the chief everything officer when you're in business, because you're taking care of marketing, operations, finance, business development, literally everything, right? But essentially, when you are that business owner, when you own that business, when you control the day-to-day of how that business operates, you're still a CEO, because yes, you spend hours working in the business, but you also have to spend hours and time working on the business. And your financial journey, your financial picture, that's you working on your business. And before you can really embrace what that looks like and feels like as a CEO within your business, we first have to understand your personal finances, because your personal finances has so much to do with your business financials. A lot of us don't necessarily like to admit it, but a lot of times the way that we treat our personal finances will mirror and impact the way we treat our business finances. I know that sometimes you can't really control what you don't know, but as you guys are coming to workshops like these to gather information to enhance your financial repertoire, right? You're able to make more strategic decisions. But in order to even do that for your business, I want you to be able to make strong and strategic decisions for yourself, understanding who you are financially, understanding your habits, understanding your financial mentality, so that you can understand how it is that you're showing up in your business. Because as the CEO, as that owner, you want to be an asset to your business, and you do not want your financial picture to make you become a liability to your business, where your business can't grow or scale because we have some things personally that we just have not dedicated the time to figuring out. It's okay if we've had a rocky journey financially previously. It's more so about how are we moving forward? What are we doing today forward to help ourselves so that we can also help our business, but also so that we understand our risk tolerance. You know, what type of risk can we truly afford to take personally within our business, right? Because that also impacts our business life cycle. If you guys haven't already, I encourage you, you know, as a call of action, to sit down and make an inventory of your personal finances. And you can do that by creating a personal financial statement, where this document is going to detail all of your assets, but also all of your liabilities, right? ultimately it will give you your net worth. It will tell you how much you are worth as a person right now. And a lot of us don't even realize that we might be walking around with a negative number over our head that people can't see. But in order to really address it, in order to grow, in order to do things differently, we have to understand where we are now. What is that starting point for you? And you do that by self-assessing first who you are. I always say, do a SWOT analysis, right? So that you can truly understand your financial strengths, your weaknesses, your opportunities, right? As well as your threats. You want to know these things so that one, you can enlist the type of help and support that you need, but also two, so that you can start unlearning and addressing some things to make room for growth, to make room for new things that you learn along your financial journey. A quote that I really, really, really want you guys to let sink in. Entrepreneurship is living a few years of your life like most people won't, so that you can spend the rest of your life like most people can't. For me, when I first read that, that sunk in a little bit differently. That reminded me that, Lindsay, in order to live your life in the future, the way that you dream, having freedom, freedom of your time, freedom of your finances, the flexibility that you crave, you have to invest time and energy now into creating that financial foundation within myself personally, but also within my business. It's possible. It just means that we have to do the work. And sometimes if we want an even brighter future than we've even imagined or seen in our environments where we grew up, that means sometimes we have to work a little bit harder. But it's worth it because it's for you. Each of you guys are here because you are investing in yourselves, but you're also investing in your business. Really let that connect to your ultimate why, right? Let that drive you, let that motivate you to start addressing some things within your finances that we might not have dedicated the time and energy for previously. The first element of class, creditworthiness. Now, as an entrepreneur, it is so important, super, super, super important for you to be very aware. Okay, very aware of where you stand credit-wise. Okay, are you creditworthy? When you sit in a banker's office or you sit across from an investor, are you someone that they can trust to ultimately repay back something that you may be attempting to borrow? That is so important. I know a lot of times that when we hop in business and we get our EIN number, we assume that, okay, I don't need to focus on my personal credit. I'm going to be able to get business credit now. That's completely separate from me. No, 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 no. That's not always accurate, right? Now, are there some lenders out there that can issue credit based on just your business credit? Yes, they're out there. However, a lot of times that credit is a little bit more expensive when you don't want to have a personal guarantor. But for the average business owner, especially the average small business owner, you will be a personal guarantor for any type of business credit that you may apply for, especially if you own 20% or more in that business entity. So that means that it is extremely important for you to be aware of your personal credit standing before you even consider completing an application, right? You want to be able to know so that you can have an articulate conversation with that lender, with that banker, or with that financial consultant, that consultant that you are working with. You want to be able to confidently speak about you and your story, even if there are things on your credit report that you're not the happiest about. It still transpired. You still need to be able to explain that, to have a conversation about that. Again, it happened. It's in the past. It's more so, what are you doing to move forward? This is how I am correcting these things. This is what I have learned. This is what I am now implementing. It is so important for us to at least just have an understanding, especially of those 5 C's of credit, because that's what organizations are looking at. Now, granted, we have amazing CDFIs, just like MCE, where your loan decision is not solely based on your personal credit, which is amazing, right? If we didn't have these CDFIs, a lot of our small businesses would be in trouble. It would be even harder to access capital. However, simultaneously, you still want to work on your personal credit. That should still be a goal for you. We don't want you to necessarily get access to temporary financing to help you in this particular season of the business, but then we're still putting our personal issues aside. You want to take care of both of them at the same time, okay? It is so, so, so important. I always say you want to address it now. You do not want to sweep those issues under the rug. You want to address your credit utilization, right? Especially when it comes to your revolving credit, those credit cards, those personal lines of credit, right? How are we taking care of those? Are we over that 30% mark? That really pulls down your credit that we don't really sometimes understand the weight that it causes. Do you have some things in collections? Do you have some judgments and some liens that need to be addressed? Again, it's better to address it now than putting it off later when you really, really, really need something and you can't get it because we didn't necessarily take care of these things. It's just important in general to understand where you currently are positioned so that you know what areas you need to address to grow. Plus, you can get access to your credit report for free every year. And even during COVID, annual credit report have been given them, I believe, for free once a week, right? Annualcreditreport.com, you can gain access to all 3 of your credit reports. It is extremely important. While it will not give you the credit score, the actual score, it will still give you the report that you still need to review. You want to make sure that everything that's listed up there is accurate. You want to make sure that you completed, you open those accounts. You want to make sure that those transactions being reported, that you were actually the person who did it. Listen, scams happen, and it happens more often than not, right? And sometimes it can happen from people around you, virtually, people you don't know over the internet. You just want to always be aware, super aware, so that we can address those issues in advance, okay? Of course, when it comes to personal credit, you are going to have a need for business credit at some stage of your business life cycle. At some point in your business, you're going to want to use OPM, other people's money, to help grow your enterprise, right? But you have to be prepared to do that. Just like I mentioned earlier, if you own 20% or more of a business entity, your personal credit is going to be included within that application. They are going to review that personal credit. But also, right, if you do have a business, and especially if your business is established, you have some lenders who are also going to be looking at your business credit profile. I know a lot of times we don't really dig deeply into business credit because it's a little bit more complex than personal credit, right? With personal credit, you have your 3 different credit bureaus. Most of us use FICO 8, right? But you do have some companies who will use a Vantage score, but for the most part, we all kind of have the same general information. When it comes to business credit, there are different avenues of business credit, right? You have, of course, credit that you can access traditionally through your banking institution, but it's not always reported the same as the business credit that you will gain access to with your net 30 accounts, or those vendor relationships that you are creating, or those additional credit accounts that you may have using your business EIN number. But we still want to make sure that we are understanding the basics of how to build business credit, how to access business credit, so that you can have that capital to scale, to grow your business. And in doing so, you want to make sure that you are covering the basics, right? The basics of at least having a solid business credit profile, right? Having that important information that they're going to be looking for to validate your business, to make sure that your business is credible. Your business name, have you registered it, of course, with the state of Maryland's website, or whatever state that you may be tuning in from? Are you registered, and are you in good standing? They're going to be looking at the address. Are you operating from home, or do you have another physical address that you can use for your business, right? And some lenders care more about it than others. However, it's still something that you want to at least have some foundational knowledge of, where there are some lenders out there that will prefer you to have a different business address than your address at home. When they Google or search your business and they search that address, they would much rather prefer having a physical location of maybe a storefront, right? That pops up versus a residential neighborhood. Not saying that you can't, However, I want you to understand that as your business grows, as it evolves, that's something that you want to consider, even if you are using a co-working space to have a virtual mailbox, right? Just having an address attached to a real commercial establishment, it carries some weight when it comes to some business lenders. I'm sorry. Also, your website. Do you have a valid website for your business? Do you have an email address for your business, right? And when it comes to emails, we want to be very, very, very intentional that we're not using super personal email addresses that we might use for family with our nicknames, or email addresses that we had maybe 10 years ago that's not quite as polished or as relevant to your current business right now. We want to take account of those things, right? And even if when we do have a business and we have a domain to a website, I even encourage you to invest in an email address that's attached to that domain. So instead of being xyz@gmail, I would consider having an email address that says abc@xyz.com, right? So that your business seems a little bit more credible to these lenders, right? Especially as you're growing. Now, I understand that as when we're in that startup phase, when we're not necessarily looking for a ton of capital, some of these things may or may not be as important. But I also like to speak from the space of growth, because ultimately we want to grow these businesses, because these are not hobbies that we are just doing as a side hustle. You're here because this is a business. This is a legit business that you want to grow, right? So we want to kind of think about these things in advance. You want to know and understand your next and sit codes. You want to know what industry your business in. So when you're having these conversations with lenders, with bankers, et cetera, you can have a full-on conversation about your business, what it does, what industry you're in, but most importantly, so you also understand whether or not you are in a restricted industry or not, right? When it comes to accessing business credit, business capital in general, businesses are risky, right? So of course, a lot of lenders, they have certain restrictions on industries that they will or will not lend to. You want to know that about your business. You never want to be caught blind, not knowing something that important to your business, and whether or not you can gain money to expand, to open up this location or not, right? That's important. You want to know these things, and you want to have this basic information locked in. You absolutely want to have your EIN number. I even encourage personally, I encourage even solopreneurs, if you're using your social security number, I would consider getting an EIN number so that you already have it. Again, we're planning for business growth, making sure that we have that business bank account, making sure that we're not commingling funds, right? We're not using that personal account for our business transactions, right? Because there are some lenders who may request bank statements. They don't want to see a whole bunch of commingling. When they want to know that you can responsibly take care of your business financials, right? A lot of times it's really about perception. Some lenders get to know you, some of them don't, right? Sometimes you get to know who's underwriting your loans, sometimes you do not, right? So it's mostly on what they see on paper or what they see online. So you want to make sure that you are creating the best image, the best profile possible for you and your business. And as you get to become a little bit more advanced in your business journey, especially when it comes to accessing business credit, you want to consider understanding and getting your paydex scores through NAV, right? NAV is an awesome, awesome, awesome resource when it comes to business credit. Not only do they pair you to different types of financing, but they also provide you with education. They also provide you with your business credit scores. And it's important to understand that your business credit score is going to look very different from your personal credit score. Your personal credit score most of the time will range anywhere from 300 to 850, but when it comes to business credit, it's a 0 to 100. You want to be able to know that as you are growing, as you are attempting to gain additional access to extended resources, you also can have access to your Experian business credit score and your Equifax business credit score. And they have separate platforms where you can go specifically to their website. And just like you can pull your personal credit report, you can also pull a business credit report. I know most of you probably have heard at some point about a DUNS number, right? You want to make sure that you have one. as we're planning for growth in our business, you want to have these foundational things established. Even if you don't necessarily need business credit right now, we want to at least lay the foundation so that you can obtain it when you do need it. Even when it comes to relationships with vendor accounts, net 30 relationships with Uline, Granger, other companies such as that, who will offer you an opportunity to have access to a small credit line where you will make a purchase and it's not due until 30 days later. While they give you that opportunity, you always, again, want to make the best impression. So you want to make that payment much, much earlier than that 30 days, because of course, that also goes into building that business credit relationship. So we kind of want to think about, again, when it comes to credit worthiness, both on the personal side, are you personally credit worthy? Have you established that relationship, that trust, right? But also for your business. Is your business creating a foundation for your business to build its own business credit as well? Again, they should be happening simultaneously. Long-term wealth is so important as business owners that we still have retirement planning conversations. A lot of us, listen, and me included, a lot of us, when we transition from our W-2 jobs to being full-time within your business, sometimes we just don't create space to think about it as much as we need to, because we're thinking about growing the business today. Sometimes it's hard to think about 30 and 40 years from now. However, that being hard to think about, that's what keeps us stagnant. That's what keeps entrepreneurs 70 and 75 and having to work, right? Working, yes, sure, because they don't want to be home bored, but also working too, because financially they didn't necessarily prepare for retirement. It's so important for it to happen now. It's so important for you to roll over those old 401ks, right? Making sure that we're reviewing those accounts. If you don't have them, making sure that you at least understand how a Roth IRA or SEP or simple IRA can benefit you as a business owner. Now, they all have their different tax implications, and that's why having an accountant is also important. Also having conversations with licensed financial advisors who have securities license, who can also give you advice on investment strategy so that you can reach your retirement goals. We have to have these conversations. We have to think about these things, and we have to make sure that we have the right partners who can help us achieve those goals, okay? Listen, it is hard not to notice the price changes in everything over the last 2 years. And you have to consider inflation. So think about now in 2022, and then think about whenever you plan to retire. Just imagine the money that you think you might need to survive now in retirement, it's definitely not going to be the same 20 years from now, even 10 years from now. To be honest, not even 5 years from now. But we have to create a plan. We have to make sure that we are putting money aside by any means necessary. It's also, your company is also able to have a 401k package, right? A plan that it can offer to its employees, you included as an employee, depending on, of course, how you're filing and how your entity is set up. But still, you want to be having those conversations. It needs to be a priority. It needs to be a priority, okay? Asset protection. That's another avenue that we don't speak about often in entrepreneurship, is, are we protecting our assets? Coming from an insurance perspective, right? Do we have proper business insurance, right? Is our business covered, right? Especially think about if you are a partner, if you share your business with someone, do you guys have proper insurances on each other? If something was to happen to one of your partners, will your business be compensated, right? Will your business have a financial infusion that they can use to source another potential partner, right? Or to help you while you might be potentially closed for a little while because you're handling that situation, right? You always have to think, while we plan for the best, we still have to think about what ifs, the what ifs happen, right? Sometimes we don't necessarily want to pay those premiums, but it's so important. We pay our auto premiums every month, right? And every year when we have to renew, we're not asking them questions. Even if we didn't get in an accident, we're not asking for our money back. but that's a priority. We know in our head that that is a priority. We have to have it. You want to think about insurance is the same way. These are things that you need to have, even when it comes to personal insurance, right? We don't want to be creating GoFundMe's to bury someone in our family, and we don't want our family to have to do that for us because we didn't necessarily take care of our assets. We didn't necessarily protect our lives, right? And a lot of us, if you are full-time as an entrepreneur, I'm sure a lot of us did not keep those policies that your former employer had on you. So that means you have to insure yourself. I know sometimes it seems like the business can't afford it yet, right? But it has to be a priority. We have to include that in the budget, both personally and for your business. As an entrepreneur, you are investing a lot of time and energy into your business. You want to be able to leave your family something, right? You want that time and energy and financial resources that were invested in that business entity. You want it to be able to leave something. You want to be able to allow that entity that you work so hard for to take care of your family even once you're not here. Even considering estate planning, are we having those important conversations about how do we take care of our personal estate? Do you have a basic will? Are you having discussions about trust, power of attorneys, etc., right? We have to have those conversations. We have to do that type of financial planning, because that still matters when we're having conversations with lenders, right? That still matters. The lender want to know, what is your plan with your finances? Because if something happens to you, what happens to that debt, right? Or at least who are they even attempting to have a conversation with about that debt at the end? You in general, you want to have a plan for your finances. You don't want to just be operating and going in the flow. You want to operate with intention. Even thinking about your business, are we properly succession planning? What do you want to happen to your business when you retire or when you close your eyes for the final time? What do you want to happen with this entity, right? And even at the basic level, that plan, that conversation still needs to be had with your attorney or with business partners or family members, whomever, right? And that information needs to be relayed even in your operating agreement. When lenders are looking for your operating agreement, they also want to see, what is the plan for that entity, right? Do you plan on dissolving the business? Do you want to sell it? Do you want to pass it down to someone in your family? We have to have these tough conversations that sometimes we avoid, or sometimes we feel like we're not necessarily ready for because our business hasn't hit that $1 million mark, right? Or that $500,000 mark, or whatever your financial goal is for your business to obtain. But you have to have these conversations now, because they impact you. They impact your personal financial story. They impact your business foundation, right? These conversations have to happen. Strategic banking relationships. This is my favorite topic, because sometimes we underestimate the power that comes from having a relationship with a financial institution, right? Excuse me, let me take a drink of water. Sometimes we underestimate what that looks like to have a banker at an institution who knows us, who knows our business, understands our goals, right? Who also understand our former financial challenges, because a part of creating these relationships is being honest, is being able to show up as your authentic self, to have transparent conversation about what's going on in your financial world or what has happened in your financial world. We can't help you. Bankers cannot provide you with the resources that you need if they don't really know the full story, right? You never want to put your banker in a situation where they're submitting an application for you and underwriter brings something back to them that they didn't know, that they didn't hear from you, right? Because a lot of times creating that relationship, building that trust gives you an advocate within that institution that kind of helps bridge the gap between you and that institution and creating a financial partnership. I remember so vividly as a business banker, I would get to know my clients very intentionally, because I knew that if there was something you needed, it was going to go through me, regardless of what department I had to reach out to afterwards. I was still that direct connection between you and our back office. So it was important for me to understand my clients, to understand their goals, to understand their challenges, to understand how we best can support you along that journey. yes, it's a two-way street. Yes, your banker definitely needs to be putting in that effort to get to know you, to understand your business so that they can support you. But you as a client, sometimes you also have to initiate that conversation. You have to let that banker know that, hey, I'm interested in building an intentional relationship with you. I remember in my last position as a branch manager at my former financial institution, where I submitted a number of applications for clients who did not always get approved initially. But because I had a relationship, I would pick up the phone, I would call the underwriter and speak on that relationship that I had with the client. And I was able to get some decisions overturned strictly based off of the relationship that I had built with the client and my ability to advocate for that client with my underwriting team. Again, when you're thinking about traditional lending, right? A lot of times you don't get to see that underwriter. You don't know them. They don't know you either. They're just looking at your name on a screen and some numbers, your credit report, and some other things right about you, but they can't put a direct connection to understand that when your credit score dropped 3 years ago, you were going through a divorce, or your husband or wife got sick, or you were sending the kids to college, right? And you got laid off of your job. Your underwriter might not know those things. They're not going to have an opportunity to hear your story full out. But if you have that person that you have built that relationship within that institution, it makes a world of a difference. Even thinking about the access that you can get from your banking relationships. I remember making introductions to clients who couldn't get approved at the bank to CDFIs like MCE, right? Still providing resources and access, but you don't have an opportunity to even take advantage of those things if you don't have a very strategic and intentional relationship. Even thinking about what types of institutions, I get the question often, do you think I should go with a bank, or do you think I should go with a credit union? I'm the type of person that believes in diversification, right? My models may be different from that average financial consultant that you speak with, but I believe that everything and every person, every institution can serve a purpose in your life and within your business's life cycle. A credit union might give you additional benefits that you need right now, but your traditional bank might give you benefits that you need while you're traveling, right? When you think about access to technology, there are different things that they offer you, but it doesn't mean that sometimes it has to be a this way or that way. It's about the strategy behind the why, the who, and what do we need from those institutions. Even if you have a banking institution and you prefer to do everything online from your app because it's convenient, that's great. However, you at least need to have someone that you can pick up the phone and call consistently to address your specific needs. And don't let it just be you reaching out to them to ask for this feedback or to inquire about, this fee, right? You want to make sure that you're also showing up to the bank as a great client, as a client that they want to invest in, right? Sometimes we think it's a one-way street where the bank should only be taking care of us. It should be a mutually beneficial relationship. If I can be honest here, right? I see how it works. I understand how institutions look at clients, right? We have clients who are sometimes clients that we're not always the most excited to see walk through that door, but we also have clients who we love to come and see and walk in that door, and they get access to information just from creating space for conversations, right? Do a self-check. Are you that person who walks in the bank always on the phone, or don't necessarily want to have an additional conversation with the teller? Or are you that person who will engage in conversation where you want your institution to get to know you, to understand your business? Because not only do you gain access to financial resources, to internal and external resources through the bank's relationships, but you also gain access to potential clients, right? I have seen where my teams, we became clients and patrons of our small business clients who want to create intentional relationships with us. But sometimes we don't even think about that. We don't think about the potential introductions that we can receive. It's just because we don't know. But I'm here sharing this information because I want you to create the most intentional and strategic banking relationship that can truly help you grow your business, that can truly help you to create a firm financial foundation to prepare for those millions that I hope that we're all manifesting for all of our businesses, right? But we have to do the work. We have to do the foundational work to make sure that those things can happen. Strategic asset accumulation. I'm a firm believer that diversification is important. Even if your business right now is your only stream of income, you want to start thinking differently about finances. I know a lot of times they used to say that it's great to have multiple streams of income, but you want to consider it mandatory, right? It is a priority to have multiple streams of income, especially as a business owner, right? It doesn't necessarily have to be income that takes a lot of manual labor, but it still needs to be income that you can make in your sleep, that you can make that's not directly attached to what you do in your business, because businesses are risky, right? Things happen. It could be a situation like COVID where it's completely out of your control, where you have to close up shop for 3-4 months at a time. You want to be able to have some additional streams of income around you to help build that foundation so that that business can be even more successful. Because when you, as that business owner, has multiple streams of income, you can be a little bit more relaxed. You are not as pressed, right, to receive a salary from your business, because you have other means of income that can take care of you while you're thinking about growing the business. We have to start looking at business differently nowadays. We have to start looking at finances differently nowadays. Beyond, I know we used to talk about, is your business recession proof, but it's beyond that at this point, right? We want to know, is your business, but also is your personal finances emergency proof, period, because emergencies of all calibers happen around us that we cannot control all the time. So you want to make sure that the things that you can control, like additional income, like making sure that we're taking care of our credit, like making sure that we're preparing for retirement, making sure that we are protecting our assets, making sure that we're creating these intentional relationships, that's what we can control. And we want to make sure that as we are planning for growth in our businesses, that we are being very intentional about our financial journey, right? I'm a firm believer in ownership. Whether you own businesses, whether you own percentages of other people's businesses, right? And that's an investment for you, whether you own real estate, residential or commercial, right? You should own something. You should have something bringing you additional income into your fold, because again, that really kind of helps just to build and strengthen the overall financial picture and portfolio of you as that CEO, you as that entrepreneur, right? I am just now coming up on a strong year in business, and let's be honest, right? My business isn't necessarily giving me the salary that I need to take care of myself full time to resume the lavish lifestyle that I had when I was a W-2 employee. But what I did do was I turned all of my assets into income streams, right? So my real estate portfolio, I ended up turning all of my properties into rental properties so that I can bring in additional income to take care of me, so that I can focus on growing the business, right? Even thinking about my car, I got a car almost 2 years ago, right? I had that on Turo. I'm able to make additional money, additional passive income from that vehicle. As entrepreneurs, as people, as creators who create solutions to problems, we have to also learn how to create solutions to our own issues, right? We have to learn how to strategically plan for our long-term success, right? If you are operating within a brick and mortar location, I encourage you to just have a conversation with the realtor of what that will potentially look like for you to purchase your own space, right? And you don't have to just limit yourself to a single unit. Consider a multi-unit, right? I know I've been talking to a lot of real estate investors, and multi-units are becoming even more popular now because people are looking for, again, that passive income. Having a multi-unit where you are renting out, even if you leave one unit empty and you're renting out the other units, that additional income, being able to pay that mortgage and you being able to operate your business in there without a lot of overhead expenses. Or even if you're considering moving into one, if you're an entrepreneur and you're considering, purchasing a home, you can purchase a multi-unit as long as it's less than 5 units with the same residential mortgage. We have to be very intentional about how we are accumulating additional assets that can add to our overall financial picture to strengthen our financial foundation so that we can show up an even more confident business owner, right? When we're having that conversation with that banker, so that we can show up even more confident when we are looking to pitch our business to that venture capitalist or that angel investor, when we are looking to pitch, our business to the MCE loan team, right? To give us that loan to grow and scale our business. You want to be confident in how you financially show up. And as an entrepreneur, your goal should always be to be increasing your net worth while you're still in business. We are no longer prioritizing our business finances over our personal finances. They hold the same weight in our lives. They are equally important. So we have to take care of both of them simultaneously. It is so, 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 so important. Okay. I promise you, you are helping yourself. You will be helping your business. Okay. You will be creating space, creating room, creating opportunity for you and your business to grow beyond your wildest dreams. A lot of times we only really cap ourselves at what we've seen, what we have saw other people accomplish, right? But in 2022, we are dreaming beyond our imagination, right? And I'm telling you that because I still have to tell myself every day that what you're building, what you're creating is bigger than you. You all are here for a reason. In whatever industry that you are in, you have a gift, right? You have something to give, but you want to be able to show up as your best self, to give that to your community, to give that to your employees, still giving that to your families because you are still a person first, right? And a great way to do that is when you are feeling very confident, very, very confident in your financial picture, in your world, so that you can create that freedom, that flexibility, right? That especially that financial freedom to dream and to do beyond what you've ever seen or dreamt before, right? Let's talk a little bit about sources of capital, right? I know that is super, super, super important. Most of us are looking for access to capital in some capacity, right? Whether it's a loan, whether it is a grant, we're looking for it. We want it. If we can have access to it, then we want it, right? So just a couple places that you can kind of just think about as you are considering growing your business. If you're not in a space where you are ready to apply, right, for that business loan, are you thinking about funding that you can gather from your family, from your circle, your friends, right? Have you done that assessment in your personal finances to see what you even have the capacity to invest in your business, right? That owner's investment. Do you have any collateral? Do you have any assets that you can use to help you be able to qualify for some business lending to grow or to start that business, right? Are you gaining access to personal credit, right? A big thing that I want entrepreneurs to think about is you want to apply for credit. And this is a golden rule. You might not hear a lot of people say this, but you want to apply for credit even before you need it, right? You want to kind of prepare, because a lot of times when you absolutely need it and you're applying, either you have mostly exhausted the majority of your cash or you have ran up your personal credit cards, right? And now we're desperate where we absolutely need it. You want to get credit. You want to secure credit before you desperately, desperately need it. And it's very possible even before your business generates a whole ton of income. I think about when I established my entity. My entity was legally established on paper 2 years ago, right? Before I was even operating in the business in the way that I'm operating today. However, as soon as I opened up that checking account, I instantly applied for a business credit card. And again, as long as you're taking care of your personal credit, and as long as if you have some type of additional stream of income, my business didn't necessarily have the income, but because I did have another stream, of course, I could include that within the application. And I was able to get that business credit card to help me grow my business without having to invest a ton of personal credit into that business. Now, yes, just like most of us, I did have some personal debt that I accumulated to grow the business to kind of get some things started. But what I did was, once I got that business credit card in place, and this business credit card did not report to my personal credit card, I was able to do a balance transfer. That debt that I had on my personal credit card that was for the business, I did a transfer from that personal credit card to that business credit card and was able to wipe out that personal credit card. My credit score jumped up over 30 points, right? But we have to have this education. We have to know how to strategically move within our financial world so that we can have these opportunities. Even before I was fully operating in business, especially while I had that W-2 income, right? I made sure that I had a personal line of credit just in case. Personal lines of credit are great to have, especially because they're revolving similar to credit cards. However, the access is different. You can just do an easy transfer from your personal line of credit into your checking account and have access to that cash. I made sure that I had a personal line of credit just in case. And there came a time where I needed them to make some repairs on a property, right? So I was able to pull those funds, make the repairs once the income came in to pay it back off. It's about you also having the access to build your own bank to kind of help you float some things when you're not as confident that you are ready for the lending environment. Because of course, when it comes to lending, you want to make sure that ultimately you have the capacity to pay it back, that your business has the capacity to pay it back, right? We don't want to be asking for money that we are not even personally confident that we can repay. So sometimes that takes you being creative with your own personal finances first. However, you have to have a solid personal foundation to even give yourself an opportunity to tap into those additional resources, right? They are out there. We just have to know about them. We have to educate ourselves. We have to be connected to the right partners who can help us, right? Some additional sources of capital that you'll see that are very popular, definitely SBA guaranteed loans. It may be common knowledge or not that, of course, the SBA does not actually give loans, right? You have to go through an SBA approved lender, in which MCE is one. So you guys have one right there in your back door. That's another way to secure some business funding, right? To grow your business, and having the SBA to guarantee that for that lender. You have crowdfunding, you have angel investors, venture capitalists, etc. There's so many ways to grow and to scale and to start your business financially. However, we have to be exposed to the knowledge so that we understand how to make more strategic financial decisions. My favorite part of the afternoon, questions. I know we went over a lot. I hope that this was easy to digest. I also hope that it was very beneficial. And now I'm going to see if I can pull up the chat to see if we have any questions.
I don't see any in the chat, but please feel free to unmute yourself and ask questions. This is the time to ask the expert. Thank you so much, Lindsay. That was awesome.
Yes, ma'am. Thank you again for having me. Thank you all for sticking with us today. I have my contact information on the screen. Definitely keep in touch with us. You can email us if you have any questions, info@kingdomvisionconsult.com. You can also follow us on social media on Instagram, LinkedIn, and Facebook. And we also have the link to our website. I see that we did have a hand raised. It's Love Light Therapy.
Hi guys, how's everyone doing?
Good. How are you?
I'm good. I'm so happy to be here. You touched on so much that I've been wondering about. So last night I asked myself this question, and I didn't know that I was going to be in a meeting with you. So I'm like, wow, maybe I can ask her. So my question was, because I'm thinking about what would be best financially for me. Should I invest into a whole life insurance policy, or try to just get my credit cards paid down first? Because I am looking to get funding from a lender, and I want to know what would be best for my next step. Would it be best to have my credits paid, my credit cards kind of paid down, so that, because if they're looking at that, that's what they're going to be looking at. So right now in the moment, that would be the best way to go? Or should I start to invest into a whole life insurance policy to get that started?
So my question to you is, what sold you on the need of a whole life policy right now as being a priority?
So yeah, so because I've been hearing a lot about it, that's like the new trending topic on like financial advice, especially on TikTok and stuff, and I watch a lot of those. But with that, they said it's like you get cash value. So unlike other life insurances, it's like you can't touch the money. But if you invest into that, you can actually get like compound interest or something, and you're able to kind of use the money that you already put into there if you need it.
So great question. Everything, it has kind of like it's a double-edged sword, right? So that is how life insurance can work. However, your cash value isn't really even going to make a difference for you unless you're making a lump sum single premium payment, which I doubt you're probably going to do, which is thousands of dollars in a premium up front. That's the only way to get immediate cash value. If you're just going to get the whole life policy just as a regular policy, making your monthly premium payments, then that cash value isn't even going to really start accruing to that second or third year. So that's not even going to matter for you right now. So that should not be a priority. Now, if the priority is just having life insurance in general right now, then at least, I say at least have a term policy that can cover, your debts if something happened to you right now, and to make sure that can cover your final expenses. But the biggest difference between whole life and term is, one, the premium amount, because you're going to pay for that whole life policy because it's permanent. But if your main reason for wanting to do that right now is the cash value, then that's not really going to make a difference for you right now. Your best bet is to use that money to pay down your debt. Because that's going to positively impact you right now, immediately.
Right. Yeah, that's what I was thinking. But I'm like, I guess because with TikTok and the trends, they just really influence you to think like that's the next best thing to do. But logically, I'm like, I should really just pay down my credit, especially I'm looking to get lenders, and yeah. So thank you so much for clearing that up for me.
No problem. And I don't want you to necessarily think that everything that you see on TikTok is incorrect, right? It's more so about how to apply the learning. And it's more so about what's a priority for you. They might be saying it's the next best thing that's popular, right? But it's about your financial priorities. It's about what your current needs are, to understand how to apply what you learned on TikTok to your financial picture.
Right. Yes. Great. Thank you so much.
You're welcome. Any other questions? I know that was a lot. Y'all don't have any questions? Well, I'll just take it as I was very thorough, huh?
There's some comments in here. I thought I was talking and I was on mute.
Let me see.
It says, thank you so much. This was great. And a couple other people thanking you for a great presentation. Thank you all for joining us. I also wanted to mention tomorrow we have another class. It's called Research to Revenue. And that is from 12 to 1 as well. And then on Friday, we have part of our self-care series. It is called Heart Support for Body and Business. And that is from 9:30 to 10:30. Friday morning. So if anybody's interested, you can go right to our website and register, and then we'll send you the Zoom link. Thank you again, Lindsay. We appreciate you and all you do for MCE and the Women's Business Center.
Yes. Thank you all for having me. I always appreciate the partnership. Thank you for the amazing work that you put into our small business community. We can't do it without you all.
Oh, well, thank you. All right, everyone. I hope you have a great day. Hope to see you again soon.